actually have an agenda. Let me grab an agenda. Want that? Oh, we have breaking news or something.
Wow. This just in.
We're in rock and roll? We're in rock and roll. All right. Good morning. Welcome, everybody, to the Finance Committee meeting for the month of September. I appreciate everybody being here at this hour. Is there any public comment at all?
No, there's no public.
There is no public comment. Thank you very much. In that case, let's take a roll call of the committee members just to ensure we have a quorum.
All right, thank you, sir. Glenn Geisinger,
Present.
Frank Facciano,
He's on.
Present.
Ron Heckman, Larry Hemberger, I see him on,
Yeah, Larry's there.
Glenn Friedman,
Present.
and Michael Sturshek.
I'm here.
John Hayes.
All right, we're good.
And John Hayes, right?
And John.
Yep, I'm here.
All right. Very good. Thank you, everybody. Again, I appreciate your attendance, and thank you, Sylvain, for that. Seeing that there was no public comment, we'll move directly into our action items. First item on the agenda is the approval of the meeting minutes for the August 20th, 2020 meeting. They were in Novus. Does anybody, can I have a motion to approve the meeting minutes as presented?
So moved.
So moved. Do I have a second?
Second.
All right, is there any discussion, changes, or addendums? Hearing none, I ask that we approve the meeting minutes as presented. All in favor, say aye.
Aye.
Aye. Do I have any opposed? Very good. Next item on our agenda is the financial statements. If, Todd, you want to bring them up, that would be great. Take us go through them real quick for us, please.
For the month of August, and if you recall last month, we talked about actually getting to the point where we'd be in the black with some of our reimbursements from CARES. So for the month of August, we received roughly 2.2 million of CARES. That was kind of from prior months. So that brought us up to a net income year-to-date of approximately 380K. Same things we've been talking about all along. Parking down, terminal down, etc. Next slide, please. Again, what we've done to kind of manage the cost, personnel, obviously one of the biggest items. All the things we've done down to 6.3 million. Again, trying to make up 7.3. So again, overall, we have a positive net income through August. All things considered, that's pretty good. And for the month of August, which is something we always monitor, it's not on there, our operational results were positive. I mean, before depreciation, which is not counting the CARES money. So we're kind of treading water, which is kind of the best we can do given the current circumstances. So with that, I'm trying to keep it short. Any questions or concerns?
Any questions or concerns from the committee or anybody?
No.
None? Very good. Thank you very much.
I'll stay up for the audio.
So I'll ask for a motion to accept the financial statements as presented.
So moved.
So moved.
Second.
Seconded. All in favor, say aye.
Aye.
Do I have any opposed? Very good. All right, the next item on our agenda is the approval of the 2021 minimum municipal obligation, or MMO, for the pension.
All right, so every year in September, we come forward with next year's MMO. We went through this. It's a $775,000 number for 2021. This is the overall number that Tom sends out. It's coming to the board here. You can go to the next slide. This kind of walks through all the calculations. You can go through these relatively quickly so that, again, all these things that weren't in your packet, but just kind of summarize them. We went through them with the actuaries as well. But just to make sure. Now, this is the key one that I wanted to point out. This is kind of where we were in 2016. If you go down to the very bottom, you can see that 379, 380. So total was 380,000. Now we're at 775,000. You can see what's going on the top there. The subtotal for the non-union is actually going down. That's a reflection of some of the changes that we've made to the pension plan. However, the union plan is going up. So overall, we're down slightly from last year. Last year, we were at 819,000 MMO, or should I say this year, MMO 2020. And for 2021, we're at 775. So with that, I'll open it up to the floor for any questions. Okay.
Questions? All right. Then I would ask for the motion to approve.
Yes. At this point, your motion for approval.
Do we have any, if we have no discussion on this, I would ask for a motion to approve the 2021 MMO number.
So moved.
Seconded?
Second.
Thank you. All in favor, say aye.
Aye.
Aye. Any opposed?
And next item, I'm going to roll up here. This is the ICMA actual agreement. You can just leave that there right now. So that, if you remember, we did an RFQ. I'm trying to think how far back that was. It seems like forever.
That's, I think it was September.
Oh, wow.
Yeah.
Seems like a long time ago. Well, we agreed to switch from Mass Mutual for all of our defined contribution plans. That would be our 401As and our 457 plans to ICMA. This is actually the official agreement, which has been reviewed by both our pension counsel, Keeley, who is also on the line, and also the judge as well. So we've kind of come up with the agreement. This is just something we're taking to the board for formal approval. Again, it's been reviewed by multiple counsel, both the judge and our pension counsel. And if you have any additional questions on that, feel free to ask questions. But again, this is the actual agreement. I think the final date that we will actually be over into the ICMA when all things are said and done, when the blackout period is over, I believe is November 9th. So there'll be a 2-week blackout period. We do transition where you can't make any changes. But everything's kind of been in motion, but the final, when participants can go in and say, hey, I'm in ICMA, I want to make a change, is November 9th. Any questions? Okay.
No questions? All right. In that case, I would ask for a motion to approve the ICMA agreement as presented.
So moved.
Do I have a second?
Second.
All right. All in favor, say aye. Aye.
Aye.
Any opposed? Very good. Thank you. Next item is the approval of the plan amendments for the non-union pension plan.
So for the plan, for the non-union plan, we're just making a plan change to make it comparable to the union plans. Basically, instead of it being the last 5 years, it's just the best 5 out of the last 10. That's the only change. We're just making the plans consistent between the non-union and the union plans. So that's pretty much it. Any questions, concerns?
Okay. Hearing none, then I would ask for a motion to approve the plan amendment for the non-union pension.
So moved.
And a second?
Second.
Second. All in favor, please say aye. Aye.
Aye. Aye.
Any opposed? We're on a roll.
We should have a pension meeting more often.
We should.
In like 10 minutes.
All right, the next item on our agenda is the actual pension review. And this is, I believe that Keeley Collins is going to, from All Benefits Law, is going to go through this for us.
And Keeley, just for clarification, is the pension attorney for both of our plans, both of our DC plan, our defined contribution, and our defined benefit plan.
Okay.
And that's Keeley in the back. You can wave so they know who you are there, Keeley. There you go.
Thanks, Keeley.
Good morning, everyone. Good morning. It's great to see you. I'm just going over some factors that we'll be looking for in the review, not to, that you all would leave as pension experts. Otherwise, I wouldn't have a job anymore for the board. But I just wanted to introduce some of the major changes you should be aware of. In your packet of materials is a comprehensive chart that includes all of the most important changes from both the Secure Act and the CARES Act. This is new employee benefits and retirement plan legislation that has taken effect in between the time of my last meeting with you and today. So I wanted to make sure you understood the most important provisions that would be applicable to this board and to our employee benefits plan here. As many of you may recall from the last meeting, the most important, or probably the scariest rule that typically applies to retirement plans, ERISA, does not apply in this context. However, because you have tax qualified plans, there are other standards that apply. So if you would just, when you get a chance, if you want to look in your packet, our office put together a comprehensive chart of all the changes. But just to go through the most important ones, you'll see on your slide the required minimum distribution, also known as RMD. The maximum age has increased from 70 and a half to 72. What this basically means is that the participants would not have to have the required minimum distribution until age 72. These distributions are not eligible for rollover, so this could be interpreted as positive change. This would be something that would be addressed in the upcoming plan restatement, which I'll talk about later on in the presentation. For the next slide, another change that was made by the Secure Act, which, by the way, was one of the most comprehensive, probably the most comprehensive pension reform in over 10 years. It eliminated the stretch payments for tax qualified plans, and relevant to the plan that we have here. So there is an IRA component, but that's not the plan being addressed here. The stretch payments are not available anymore for inherited employer tax qualified plans for non-spousal beneficiaries. It's still available for spousal beneficiaries. As you may have expected, this is essentially just a revenue raising rule for the IRS, because some of the other rules sort of maybe cost some money on the tax side. Next slide, please. Next slide, please. There should be adoption, birth. Slide. Is there a slide number 5? Okay. So in addition to those, were probably the two most important mandatory changes you should be aware of that would apply in this context. But there are a couple of changes that are optional, meaning that you can adopt these changes into your plan if you'd like to. The IRS normally provides for a 10% early withdrawal tax for employees who withdraw from their retirement plans early. But the Secure Act does offer penalty-free withdrawals for birth of child or adoption. This is an optional feature that if the board would like to consider, or the airport would like to consider during a plan restatement, it's something that you may add. You don't have to, but it is optional. Then can you turn to the next slide, please? In addition to the Secure Act, the CARES Act was also enacted, and the CARES Act is specific to coronavirus-related distributions. This is another permissive or optional amendment that can be made to the plan. And this really is only helpful if you have people who are struggling financially related to coronavirus, or you've had to make major staff overhauls or something like that. Your plan participants may benefit from this withdrawal. It's another thing. It's not mandatory. It's optional if you would like to include it. Next slide, please. This is another CARES Act change. Typically, plan loans generally are limited to the lesser of the vested account balance for $50,000. There's an increased amount for qualifying individuals under the CARES Act. This is another non-mandatory change. You really don't even have to allow loans from your plans at all, but this is just an option if it might be desirable. Next slide. So that just basically wraps up the Secure and the CARES Act. I didn't think at 8:45 in the morning you'd want a long lecture on dry kind of academic pension laws. But if you would like to refer to your packets, there's a comprehensive chart there for you if you would like to find out more about either one of the Secure and the CARES Act or both. Right now, we are currently in a retirement plan restatement cycle, and what would be considered prototype retirement plans, such as the one that the airport has right now. These are pre-approved plans. So we're going through a restatement of the plan right now, and I am very glad to be closely involved with that and helping to review the documents and make sure that the airport continues to be in compliance and avoid some of the rather onerous fees that can come about from being out of compliance with the IRS. Just some general compliance issues that I would look for in reviewing the revised or restated retirement plan. I would be looking for whether or not the plan complies with this new legislation, particularly the mandatory provisions. There are also the existing tax quality requirements that we need to meet. I would be helping the airport every step of the way with that. In addition to the tax qualified plans, you do have a 457B plan also in place, which is similar to, if any of you, I'm sure some of you out there have a 401k, I know I do. The 457B is kind of a government version of the 401k. I'll also be involved in reviewing that to make sure we're in compliance with the standards for 457B, which are IRS standards as well. Next slide, please. In terms of fiduciary obligations, for those of you who deal in the pension space, you might be familiar with this term. This is one of the most significant areas of liability for any, or it certainly can be one of the most significant areas of liability for retirement plan sponsors. Thankfully, we are exempt as the airport from ERISA, which is one of the main one of the main laws that will implement these obligations. In Pennsylvania, as a municipal employer, there actually is a fiduciary obligation, not to the same level as ERISA, and there really aren't very many court cases on it, which means that not many employers have been brought to court, but of course we wouldn't want the airport to be the test case for that. The fiduciary obligation is essentially what's called a prudent man standard, which of course was adopted back before we used all this gender inclusive language. But essentially what that means is that we're acting reasonably and with fidelity to the best interests of the employees, the individuals who are participating in the plan. And that is certainly part of our review. Next slide, please. Thank you very much for your attention. I tried to keep this brief and not go on forever and ever, which, as some of you may know, is a challenge for lawyers. So if you have any questions, please let me know. I'm very, very honored to be able to help the airport in this endeavor and keeping your pensions compliant and up to date. And I'm always here in case you have any questions. My email address is on the slide. You can contact me at any time, or if you have any questions here today, I'm happy to take any questions.
Hey, Keely, just for clarification, I don't think that the additional packet of the full changes was loaded in the Novus, so we'll make sure that gets loaded in after the meeting. So
Okay,
if you can't see that right now, I think the only thing we loaded in there was your presentation. So
And the chart.
and the chart. So
The chart was it, yeah. The
Oh, the
chart
chart.
was the additional.
the chart is the one you're referring to. Okay, that's fine.
So it's a notice.
So that chart is in Novus. Okay, just for everybody's understanding. So that chart that she's referring to is in Novus right now. Thank you.
Great, thank you.
That's the one she's referring to. Okay.
Yes.
Okay, that's the one she's referring to. Does everybody have that in? Everybody should have that in their packet.
Yep.
Okay.
And just I wanted to make all of you aware that there was no additional charge for the chart. to the airport. That's our gift to you.
Thank you. We appreciate that.
That's great. All right, does anybody on the committee have any questions reference to the presentation?
I'll just add one more thing. Keely's been very helpful as we switch plans from Mass Mutual to ICMA to make sure we're in compliance. We're actually doing some additional review once we get everything in place, just to make sure everything's kind of on board. And it's just kind of a review of both the DC and the defined benefit plan. So Keely's been very helpful in making sure that we're in compliance, because nobody wants to pay those non-compliance fees.
Absolutely, absolutely. Are we prepared to move on to the next section?
I saw Dave on there, so he should be on there. Dave's up. Should be on the Zoom. I saw him earlier.
Yes, he's
All right.
on Zoom.
Dave, are you ready to rock and roll?
I sure am.
All right.
Can everyone hear me okay?
Yep.
Yes.
Great. First and foremost, I just want to thank Rebecca for keeping me in the communication loop, and thank everyone for the invitation for the meeting this morning. I wasn't available for the last meeting. One of my colleagues, if you all recall, Rosalie Richards, attended in my absence. So I'm happy to be back in the saddle and at your meeting this morning. What I'd like to cover today, I prepared an executive summary for the board to talk about first and foremost the two pension plan accounts, the union and non-union pension plan accounts, and give you some perspective on the activity as we provide directed trustee asset custodian services and pension payment services. Secondly, I'd like to just update everyone regarding the transition to Principal Financial Group. I hope most of you know, and if you don't, earlier last year, Wells Fargo and my business group in particular, Institutional Retirement Trust, was purchased by Principal Financial Group. So we've been working steadfast and constant with the migration of my business group to Principal Financial. It's been a very methodical and well thought out transition. I'll cover some of that information, give you an update on the timeline and what you can expect with respect to your two pension plan accounts and when we're going to be transitioning over to Principal Financial Group. The first slide you see is my new business leader, Shri Reddy. So just some comments from Shri concerning the Retirement Income Solution Group that is known at Principal Financial Group. Just for perspective sakes, I'm still Wells Fargo Institutional Retirement and Trust. I'll continue to be that until this time next year. So Shri is leading the charge on my business group. Just some words, overall words to the committee regarding the transition. Next slide, please. Great, thank you. That's good. So here's the relationship at a glance. I've provided key statistical information through August 31st, which is the last monthly cutoff. We show the two market values of the pension plan non-union at $8,131,335. The union pension plan at $7,147,297. An important aspect and service that we provide for the two defined benefit pension plans is pension payment services, taking care of your retirees. We do that with the assistance of the Danetta, of course, using what we refer to as our retirement plan payment system. Currently, we pay out in each of the respective plans $37,957 in the non-union plan, which breaks down from a recipient standpoint. There's 33 active retirees receiving those benefits, 30 of which are receiving direct deposit, and we still have 3 individuals doing it the old-fashioned way, where we issue a check. On the union pension side, we pay out $34,344 per month, which consists of 33 direct deposits to the active retirees, and then 13 are receiving a physical check. Going down a little bit further, just a highlight of just some of the services that we provide. If we can slide down a little bit. Yep, there you go. Thank you. So again, our capacity as it relates to the Airport Authority is directed trustee, which along with directed trustee comes some fiduciary services. We provide all aspects of trust accounting and reporting for the 2 union pension plans, trust portfolio reporting, obviously benefit payment processing, and we're responsive to all your other service providers as well. So we work closely with your investment manager and your actuary. Okay, next slide. Slowly getting there. Uh-oh.
What I call a white paper.
This isn't a joke, just to make sure everyone knows. Well, perfect.
That's so good.
Thank you. Thank you for whoever's driving the car this morning. Again, just to recap, our role as directed trustee and asset custodian. All of the responsibilities associated with really safekeeping of the plan assets and investments, along with providing benefit payment services. We do really all the blocking and tackling, I guess, as it pertains to the financial transactions in terms of record keeping within the trust, the 2 trust accounts. We have a fairly robust online reporting system, which the Airport Authority has access to if they prefer to run some ad hoc reporting at their will. But essentially, we provide substantially most of the reporting on a monthly, quarterly, and annual basis, as well as preparing audited annual trust statements that are made available to your auditors as well. The service team, and this is an important point I just want to touch on, especially in light of the transition to principal. Your current service team, and I have all the members listed here. I am the relationship manager, so I oversee the total relationship of the account. My manager, Antoinette Watkins, is the regional director. All of these individuals that are listed on this page will continue with principal after the migration in September of next year. So that was a commitment that Principal and Wells Fargo Institutional Retirement and Trust agreed upon, and it's really business as usual for the time being. So All of our contact information is there. If anyone from the board or any of the other service providers need to reach me or anyone of my service team, please feel free to do so. Or if you want to just contact me, I'll make sure you get to the right person. Okay, next slide. And one more slide after that. So let me just spend just a few minutes talking about the transition to principal. It's been a very good and rewarding experience since last year. There's been a lot of work behind the scenes that has taken place over the past year. Todd and some of his staff members, I've reached out to them and I've touched them with obtaining some information as we go through the transition. A key piece of that information was, and you can stop right there, that's good, we'll pick up at this slide. A key piece of the information was something referred to as the service continuity and consent agreement. So Principal and Wells Fargo made the decision that we are not going to put our clients through the agony of repapering all of their legal agreements, including services agreements. So a continuity and consent document was put in place. I reached out to Todd and reviewed that with him, and he had executed that agreement earlier this year. And that agreement really, in essence, it gives us the ability to interact with Principal, which technically is still a separate company from Wells Fargo Institutional Retirement and Trust. It allows us to share certain financial information back and forth between Principal that's pertaining to your account. And it also then will serve as the continuation of our service agreements that we currently have in place with Wells Fargo Institutional Retirement and Trust once the transition occurs again in next September. One of the nice things through the acquisitions, I mean, the first focus was ensuring that systems and platforms were compatible, and there had to be some decisions made relative to the trust accounting system. And the trust accounting system, I'm happy to say, Principal actually purchased the SEI Trust 3000 trust accounting system, and that happens to be the system that we currently administer your accounts on. So you'll see very little change with respect to the actual reporting, financial reporting relative to the trust accounting system. Our operation team in the background, the people that process the transactions on a day-to-day basis, where they settle trades that are executed by the investment manager. That whole group again is coming over to Principal. So we really don't believe there'll be any interruption in services. I know there won't be, and Principal is relying on us, Wells Fargo IRT, to lead the charge with the integration of the trust system. So you'll notice though next year, I mean, obviously the colors will change, the name will change from Wells Fargo to Principal, but very little else will change. So can I have next slide, please? And again, just reiterating the migration, the intent is to make this as simple as possible for all of our clients. The airport authority definitely. Again, some of the added features of retaining or selecting the trust accounting system that we're currently on, there'll be no changes to account numbers. I mean, it sounds relatively simple, but I've been through many mergers in my past 27 years with Wells Fargo and all the predecessor organizations. And when we changed trust platforms from one to another, account numbers were changed and things like that. And that sometimes presents a whole host of problems just from a communication standpoint. We'll retain, we'll be able to retain all the account history, all the data, all the historical data that we've accumulated in the longstanding relationship that we've had with the airport authority will be brought over on the principal platform as well. And Todd and the rest of the staff there, things have been a little quiet with respect to the migration, and that's by design, because the intent and the timing of the migration for our trust and custody clients, in which you are a trust and custody clients, is earmarked for September of next year. So you can anticipate more communication from me towards the end of the first quarter and into the second quarter of next year. Okay, next slide. I think I'm just about done here. Again, so I've mentioned this migration. Here's just an overview of the timeline associated with when we're going to physically move your two pension plan trust accounts to the principal platform. It'll occur Labor Day weekend 2021. So again, a very methodical, well thought out process. Just for everyone's information, this month, the month of October, we've actually initiated the migration for other clients that have other types of retirement plans, in particular the daily record kept 401k plans that we administer for them as well. So we just started, we'll just be starting in October the migration, and that migration will run from October and it'll end on Labor Day of 2021 with the transition of our trust and custody clients, the airport authorities accounts in particular. A key aspect I just wanted to highlight to everyone on this slide is the June 2021, the September 2021 timeframe. And Todd, I'll be in touch with you prior to June regarding this. One of the things that we take very seriously is the well-being of your retirees, those retirees or pensioners that are receiving monthly pension payments. So we principal, when we are principal, and we will provide all of the communication and do all of the communication. And I'll talk to you, Todd, as we get closer to this time frame next year, to your retirees, just to inform them that the check that they're going to receive after Labor Day 2021 will be from Principal Trust Company and not from Wells Fargo. So we'll do written communication and mailings, and there'll be no charge or no cost associated with that. That will be borne by the airport authority. So more to come on that. But in addition to, again, obviously we want to make sure the assets of the portfolio are handled appropriately as well. I mentioned, I think earlier on in the presentation, or was listed, that we won't be, you won't have to be out of the markets. All we'll do is re-register the current portfolio holdings, the investments, and will in the pension plans will re-register them using the principal registration name. So no direct impact to your investment manager, or no direct impact to your investments in your account. It really truly will be a seamless transition to the principal SEI Trust platform. Okay, let's see, next slide. Again, just our commitment to you in summation. Todd, you'll start hearing from me more after the end of this year concerning more information on the transition over to principal, and it's our expectation that we're not going to ask a lot of our clients to help us with that process. Your commitment to us on the service continuity and consent document is worth more than you can imagine from my perspective, and I will continue to service your relationship through the transition and after the transition as well. Okay, I think let's see, one more slide, and that should do it. Okay. Does anyone have any questions for me regarding the status of the account as it is, as I presented it today, or concerning the transition and migration over to principal?
Are there any questions from any members of the committee? Hearing none. Thank you very much. Appreciate it, David.
Thank you very much.
Thank you.
Thanks,
Our
Dave.
next individual is Peter from Bayer and Barber.
Morning. This is
Morning.
Peter Carapello. Oops. Okay. Becca.
There we go.
Okay. All right. We'll start out with page 1. We'll go to page 1. Just saying these are the highlights. First of all, before we continue, let me introduce myself, Peter Carapello from Bayer Barber. We are the actuarial consultants to the pension plan, both the union and non-union. And our responsibility is to keep the account in compliance with rules and regulations from an actuarial point of view, including the municipal minimum obligation, the MMO, and every other year we prepare an annual valuation report. So they're prepared on odd number years. For example, 2019 was the last report, which I'll go into. Next one will be 2021. So if we flip to page 3, okay. This report, it concerns the highlights of the January 1, 2019 valuation report for both the union and non-union plans. And we project these plans that we did the reports as of January 1, 19, but in order to give you the latest updated information, we projected the liabilities and used the assets provided by John to give you the information regarding your current funding ratios, which I'll go into later. As we say in the second paragraph, these reports are completed every other year. The previous report was 1/1/17, and the next one, the last one, I'm sorry, the previous reports were 1/1/17 and January 1, 19, and the next one is 2021. Now, it's important to understand that even though we do the report as a 1/1/19, the law requires us to use that report to determine the required minimum municipal obligation for the years 2020 and 2021. So you look ahead You skip the current year and you go to the following year and then the year after that. Now, the report projects the 19 valuation report to August 120 and also includes changes to the required minimum distribution rules recently enacted by the government. Okay, go to page 4. There have been some changes in the plans, specifically for the non-union plan. The participation in the non-union plan was frozen to employees participating in the plan on or before December 31, 2017. That means only the people who were in the plan as of 1/1/18 or before 12/31/17, they will continue in the plan and get pension accruals and retire from the plan in accordance with the rules. Anybody who was hired after 1/1/18, their pension will be come from a defined contribution plan. They will not get a pension plan from the current plan. They're going to have a defined contribution plan. And the authority's reasoning for making this type of change was they want to contain the cost of the defined benefit plan. So slowly, the defined benefit plan will go down in a matter of attrition as people retire and die, and eventually there won't be a plan. But it's going to take many years. But the cost of the plan should go down in the future as long as the actual assumptions are met. Okay, next, page 5. There were a couple changes in the union plan to firefighter employees. Participation for the firefighter employees was frozen as of December 31/18. Firefighter employees hired after 1/1/19 are not eligible for the defined benefit plan and participate only in the defined contribution program. And again, the purpose of this is to reduce the future cost of the plan. Page 6. The police and Teamster employees, those two groups have not been renegotiated. They are continue to participate only in a defined benefit plan and receive their annual benefit accruals for service under that program. So there's been no change for the police or Teamster employees. Okay, we can flip to page 7. And now we're getting into the interesting area. Based on the results of the 1/1/19 valuation report of the combined plans, the authority was assessed by the Municipal Pension Reporting Program, which is a state agency, to have a funding ratio of 87%, resulting in a 2020 distress score of 1, minimally distressed. The authority has received that officially from the MPRP, and this program will continue in the future, and the next time it'll be done will be based on the 2021 valuation reports, and it'll be a 2022 assessment. Now, we estimated as of August 120, your current funding position based upon your assets and your liabilities, and that came out to 93%. This is really good because your distress score is 0, which is, quote, non-distressed. If we flip to the next page, oops, did I move that? Okay, I lost it, okay. In order to receive a score of 0, quote, not distressed, the authority has to have a funding ratio of at least 90%. So if you're under 90, from 70 to 89%, you're, quote, minimal distressed. And if you're under 70 down to 50, you're moderately distressed. And actually, the word moderate isn't, I think, correct, because if you get down to the 70% ratio of a funding, that gets to be pretty much of a deep hole for an authority or a municipality to operate in. It's not what I consider a reasonable funding ratio. So, but that's the law. It's pretty wide bands between 70 and 90 and 50 and 70. Now, the important thing here, from your perspective as pension committee members, the fund's financial condition is driven by contributions to the fund and the investment performance. If the fund does not achieve at least 7.5% return, then the fund may face sharply higher contribution levels in the future. So it's critical that over a period of time, the fund average at least 7.5% to avoid having to pay shortfall charges. When the fund does not earn 7.5%, then when you determine the MMO, the MMO requires that the shortfall in the investment performance be made up over a period of years. So it adds to the charges of the fund if you don't get that 7.5% return. And by the way, if you have any questions as we're going through this, speak up, because it does get a little complicated. Let's go to the next page, 9. Let's go right to page, the following page 10, maybe 11. Let's go right to this. Combine. Let's go to the combine. That's it. Here's where we want to be. This is a combined summary of both the union and non-union programs together, okay? And if you start out on the right-hand column, going back to 2017, I'm giving you a little bit of a historical perspective to show you how the improvement in the fund has gone from 17 to August 1 of 20. Back in 1/1/17, the funding ratio was 86%. 19, we stayed about the same level. In 20, we went up to 98%. And a lot of that has to do with a 20% investment performance that you had in 19, which we used in determining the 1/1/20 funding ratio. So that was super. And that drove that increase from 86% to 98. Now, as of August 1, as you all know, you're following the market. We've had a difficult year in the market, but we're still, as of August 1, 93% funded, which is super. So overall, we've had an increase from 86 to 93, puts us in a very strong position. But in order to keep it strong, you need the two things: the continued contributions, the MMO, and the investment performance. Go to the next page. Here, we're going to give you a summary starting back to 2011 to see it from a historical perspective in about 10 years. So we started out at 87% funded over the right-hand column. We had 95, 103, 86, 86, 98 estimated as of 1/1/20. And as of 8/1/20 with that 93% rate. So overall, the fund has enjoyed a relatively strong performance. I mean, it's in good condition. You can walk with your head high when you are discussing your funding ratios. If you're in that 0% not distress level, you know, it's a great area to be in. Because anywhere from 90 to 100, you can sort of have room for fluctuation when the market goes up or down. And the next page 13, well, these are just the active participants, and we're staying pretty consistent between the active and the retirees. You can flip to the next page, 14, and go to 15. Now, 15 is actually sort of repeating what Keeley, the attorney, talked about earlier, the Secure Act, and I didn't know she was covering it. But basically, what she said was effective 1/1/20, anybody who is in the plan is going to be eligible if they're age 72, or if they're not in the plan and they did not take their pension for whatever reason, they're going to have to take it at age 72. So we don't have anybody at the 70 level, so it's not really an issue right now, and may not be in the future. So there's no sense spending a great deal of time on this rule. If we get to that point where we have anybody at 72 at that time, it will require the authority to make payments in accordance with the law. And that pretty well summarizes the report. We're in great shape from a perspective of funding. We're using reasonable assumptions. 7.5% is an assumption that the investment manager has confirmed in the past is a return that he can achieve over the long run. And when we're talking about this plan, we're talking about not 1, 2, 3, 5 years. We're talking 10, 15, 25 years. So over that period of time, it's anticipated that the fund will earn 7.5% each on average during the period of time involved. Now, there are going to be years where we might earn 5, 4, 3 negative. But then we have great years like we did in 2019 where we got 20%. So I think we're using assumptions that are reasonable. The result is the investment performance has been good. We're in compliance with all rules and regulations. And overall, we're in great shape. So I'm open to any questions. Todd, anybody?
Actually, Peter, I wanted to piggyback on a couple things. You pull up that one slide that I have for comparative funding. Kind of piggybacking off of. Yeah, so what we wanted to do here is show kind of where we are compared to some of our neighbors. So Peter talked about where we were, 87, and again, it's comparative funding, so it's 7.5. But you can kind of see the city of Allentown is at 86, 82 for the city of Bethlehem, Easton 69, Atlanta at 78%, so that's at 66.5%. So again, going back to what Peter said, we are in line with others. If you go back, and we didn't have that's probably 8/30, August, but we didn't have August for Northampton and Lehigh, but we went back to the end of last year. You said what Peter pointed out earlier, we were 98%, Lehigh was at 86%, and Northampton was at 88 at the end of last year. So relative to our neighbors, we were doing better. And one of the things I think that's kind of consistent with that is in 2017 and 18, we made additional contributions to the fund, which have ultimately helped us out. We made contributions in excess of $200,000 for both of those years. So that has been well placed to kind of get us where we are now. So I just wanted to kind of mention that in line with what you're talking about, because it's consistent with what you're talking out there, Peter. So you can take that on.
This is
Okay.
John Hayes. I'll make my annual comment that I still think 7.5% is too high, and I'd like to see us work towards 7% and perhaps at some point in time even get below 7. I see all the other parties, and I understand that we're in line with the other parties in the area, but I still think 7.5% in terms of an assumed rate of return is too high.
Thanks.
I agree with John.
We'll get there slowly. We'll get there one step at a time. And if you look at where Atlanta is, and before we take this down, I mean, they're at 6.5. I mean, I think that would be kind of the impact on our plan. If we went to 6.5, we would be in the higher 70s from where we are now. So,
Yeah.
so there's something to keep in mind. Again, I hear what you're saying. If you remember, we were at 8. We went to 7.5. Let's take a deep breath. But yes, we understand that might be a little high, but
Yeah.
John
No,
here is
Todd,
going to tell us that we can earn 9.
With Lanta, the 6.5% and 78% funded is no different than 7.5% and 90% funded.
It's comparable to where we are with
Yeah,
the
I mean,
7.5.
there's no difference mathematically to the 2 points.
Correct.
It's the same level of funding. It's just what you're looking at in terms of future assumptions.
Correct.
Yep. So I'll just keep bringing this up annually, and we'll see if we get any traction at some point.
Well, John, if you want to contribute some extra cash to make us stay at that 80-some% when we go to 6.5, work for me.
I'll throw a 20 your way next time I see you, Todd.
Okay, thank you. Any other questions?
I just have one on Peter's slide 11. So every year LNA
Take
makes
that down.
LNAA makes their contribution in October. Does your funding status already take into account that contribution that's going to occur in October, which I think last year was close to 700,000? So that unfunded accrued liability?
Wait, no, we didn't have that in the contribution as of August 1. So we can't take something into consideration. We don't take accounts receivable
Right.
into consideration.
Okay. Because the assets are going to bump
It's a
up.
snapshot as of August 1, for example, the latest report we did, it's a snapshot as of that date. Now, if we want to look ahead and project it to 1/1/21, and reflect that contribution, but they're not making it this year. They're not going to probably make it until next year.
Okay.
All
So
right, Peter.
we don't really take it into consideration because they may not make it. Who knows?
This year.
All right, well, thank you, Peter. We appreciate it. Thank you for the clarification.
Okay.
Are there any other questions on what's been presented to this point? Very good. Or comments. Thank you. Hearing none, we'll move on to our last portion of this, which is the Oakmont Capital Management presentation by John.
Thanks again there, Peter. Great job.
Thank you.
Thank you. Appreciate it. And if anybody has a question after the meeting and they want to call me, please do so. But I'm still here.
Yeah, can everyone hear me? Okay.
Yep.
Yeah, so we're going to cover 5 plans within this presentation, so that equates to, a few minutes per plan. And then we're just going to start off with a little bit of the market. And if you go, you can skip the next one. That's just the indices over the last 12 months and 5 years. Adobe's getting finicky.
Switch open.
Well, I can talk. I mean, the chart will pop up. I think everyone here knows that between February, March, and April, we had one of the quickest sell-offs in the equity markets going back to the Great Depression. And what was interesting, this was the first time in history that it wasn't caused because businesses were making bad decisions or they were over-levered. It was actually due to a decision made by the government and companies to close down their businesses. And if you go to the next one, you can actually see on the right there the drop that we had from the January of 2020. It was roughly a 34% drop, and so far it feels and looks like it's been a V correction. And as of June, remember most of this data in here will be through August 31st, but as of June, because that's when we last updated this chart, the market was still down 8%. As of this morning, it's roughly up 4% year to date. But the one thing that is very, very interesting is that purple line on the bottom. And those two humps, if we talked in the past, is the tech bubble and the financial crisis. The first one on the left, the tech bubble, the financial crisis. The purple line is all the other countries in the world except the US. So if you add up the market capitalization and the investments in those countries, emerging and developed, what happened in the first quarter is that they almost approached their financial crisis low in 2009. They were only 10 or 15%. And as of June 30th, they were still not above their financial crisis high experienced back in 2007, where we as a country, even with the sell-off, we are still, performance-wise, significantly ahead of where we were back in 2009. So far, it's been a V recovery. If we go to the next one, let me see what we got in here. This is just, if you wanted to look at a perspective going back from 2008 and 2009, the financial crisis, the pullbacks we've had, those green circles, those are the pullbacks, which, this one was a 33% pullback. The one, in 18, the taper tantrum, it was, roughly -20. The only other one that's kind of interesting, if you go back to the Ebola one, which was like the end of 14, when Ebola came out, which was a much more contagious and deadly disease, the market only sold off 7% relative to this one where we sold off 33%. And the last point is that bottom line about down on 2020, the volatility, which is just the fear in the market, it actually approached the same fear level that we saw during the financial crisis, and that's that spike you see at the bottom right above 2020. Next slide. These are interest rates. I feel like every time I go into an investment committee meeting, I'm saying the same thing, but it just, right now as we sit here today, rates have never been lower. They keep on going lower. And this is the chart of just follow the blue line. This is the chart of the 10-year treasury. So if you lend your money to the U.S. government for 10 years right now, they're paying you 0.66% a year, which is, that chart goes back to 1958. It's an all-time low. Next slide is what's called the yield curve. And even if usually with fixed income, the longer you go out in maturity, you should get paid higher return. But that blue line is the current yield curve. So even if you lent your money to the U.S. government right now for 30 years, it's 1.4% a year, which is not even inflation. So you would be losing purchasing power. And to the comment about the interest rate assumption in the plans, historically we've been able to get 2, 3, 4% in fixed income, but now that number has been truncated. And that's why the equity markets are doing better, is that money's moving out of fixed income into equities. Next slide. This gets into the plans. Just scroll up just a little bit. So the union plan, as of August 31st, it was roughly $7 million. The non-union plan, $8 million. That second line down, net contributions and withdrawals. So if you bundle everything together, how much money is going in, coming out, both plans, to Peter's point, there's more money being dispersed than it is coming in. Over this time, since September 30th, 2015, when we took over, roughly $605,000 has gone out of the union plan. Investments returns have been roughly $2.6 million, and you can see the numbers for the non-union. Then the next section of the chart there, 2017, 18, 19, you can see the investment performance, and then the funding status that we just spoke of. The contributions, which I mentioned earlier, that occur in typically October. Years in the past, you've done 2 contributions. You've done your minimal contributions required by the state, and then you've also done a discretionary contribution. But last year, between the 2 plans, it was roughly $740,000. Next slide, please. This here is just, hey, how is the money invested? If you go to the 3rd column, the target that's in the investment policy statement, that's where we try to manage the money to. And you can see where the allocation is per each plan. They're run identically. There's a little bit of cash slippage just because the amount of money going out and coming in is a little bit different. Right now, there's a slight overweight in equities relative to fixed income, and there's a slight overweight in large cap over small and international, and that's actually benefited you. If we go to the next slide. This is just the attribution of what's been working in the plan and maybe some negative considerations. Both plans are within basis points of their all-time high. The performance of both plans on a trailing 5-year basis have, roughly returned 8.6%. The actual annual, return assumption that is needed is 7.5%. The portfolios always remain fully invested. We don't sit there and say, hey, we don't like the market. We don't take the money out. You always will have roughly a 60-40 allocation. One thing that we're proud of that we took when we came in is that we brought the investment costs in the plan down to 0.5%. Everything that's going on in the plan is being run for 50% or 50 basis points or 0.5%. And the 5th bullet point. When we look at the plan versus your peer group out there, we submit the data to a ranking service, and within the investment policy statement that you signed off and gave us, you want to rank in the top 50%, and over this time period, you've actually been close to the top 1/3 of the percent. Negative considerations is year to date diversification hasn't been working. There are some of the assets that are in international markets. Those international markets are actually still negative year to date. And some of the small cap exposure is negative year to date. But the good news is we have that a little underweighted in those 2 asset classes, and we move that equity exposure into the large cap, which has done quite well. And the other thing is, it's always noteworthy to point out is that last bullet point is because there's always cash moving around where in the portfolio there's 1 or 2% floating around because of pension benefits going out or money coming in. And when the market's doing well, that actually acts as a drag because you just can't keep it all invested at one time. So, and you can see monthly, roughly 41,000 comes from the non-union, and 34,000 comes out of the union plan. And let's go to the next. We always talk about let's go to, I think it's 21. Everything's the same, the performance and stuff. They're just broken down. We'll start with the non-union. Next one. So this is the non-union plan. You can go back and look at the numbers are identical, but the non-union, this is the union plan, whatever. 8,131,000 as of August 31st. And the number that we, track, short-term numbers, you're always going to have fluctuations, but there's the 5-year number. 8.5 is what the plan has earned after all fees are paid. The investment performance of the products is in line with our expectations. The only one that we are having a hard time is the next slide, the international guys. Right there, the international guys, which is your international composite, is all your international guys put together. So that's the performance that they're generating. And then you can see the individual components under the Causeway, Fidelity, Harbor, Lazard. And why these guys are having a hard time, they have to make 2 investment decisions. Not only do they have to determine what country and what stocks to pick, they are also having to hedge and unhedge certain currencies. And the US dollar has been so strong relative to other currencies out there. They could be getting the stock selection right, but getting the currency wrong, and it's offsetting one another. So what we have done back in 18, we added a fourth manager in there, the Fidelity International, helping to smooth that out. The numbers are tracking a little bit better. You can see the trailing 3 month, 11.7 versus the EFA index of 11.3. But, this is only 10% of the portfolio. And when I said earlier, diversification hasn't, been working, and this is an indication that the international markets are just not keeping up with the U.S. domestic markets. Next slide is the fixed income. It's performing right in line with expectations. There's a big portion of it is indexed to the bond market, and there's some active managers in there with it, one being Wells Fargo and Federated. Going on the next slide. This is just, a couple meetings ago, there was a question about the fees, so we've always included it since then. On the right is the dollar weighted, which means how much money is invested into each product. And you can see coming down from the Vanguard S&P 500 index, that is the workhorse in the portfolio, captures a big portion of the market. You've got 3 million in there. The dollar weighted is 2 basis points, not 20% or 0.2%, but 2 basis points. And our fee's the last line of $12,000. And if you add that all up on the 8 million, it's roughly 0.42% that is being used to manage the product, which is pretty competitive relative to the market place. Let's go. The next. This is the peer group slides that we were talking about. To scroll up just a little bit. Is you pick whatever the 5-year number. So the higher you are in the universe, the better you are doing relative to the universe. And each little square is a quartile. So if you look at your number, 5 years, 6.1. That 37 next to it means you're in the 37th, percentile. If you go down. And that's based out of 3,274 plans. It represents almost $1 trillion of assets of other similarly managed institutional plans out there. And these numbers are endpoint specific, meaning as the short-term performance has been dragging the longer term numbers up. So as of right now, everything's performing within expectations. You're above the 50% meeting, and you're achieving your actual return assumption of 7.5. The next couple pages are just, this is one we always show too, risk is on the x-axis and returns on the y. Where you don't want to be is that lower right quadrant where you're taking on more risk and earning less than the median return. And it takes a while. It's like moving a battleship. We're trying to get you up to that left-hand corner where you're taking less risk. Those blue lines, vertical and horizontal, that's the median universe. So we're trying to get you less risk, higher return than the universe. It's trending that way, but it's going to take a little bit longer to get the data going in that direction.
What do all those black dots represent?
Every one of those black dots is a institutional retirement plan that's in the universe.
Individual.
Yeah. Not a person, but another LNAA DB plan. Type of plan. It's plan sponsor your universe. So I think on a 5-year basis, there should be 3,400 dots in there. Portfolios.
Okay.
Yeah.
So all of them are clustered sort of between the axis and median line. Where should those cluster of dots be?
So the average is the vertical line this way. That's their average risk. The line going this way across the x-axis is their average return. So if you look at the far guy down on the way right, you can just, he has a risk level, let's just say 11.5, but he's only putting up a return of 3.6.
Oh, and that's based on their individual
It's actual
decisions.
data.
But their individual decisions about how
they're
much
managing.
risk they want to take.
Yeah, how they're managing the plan.
Okay, so that's not necessarily indicative of how investments are doing, it's the risk that they're going to take and how they decide they would,
Yeah, I would say it's a combination of both.
okay.
It's their asset allocation decision and the investment product in there. And you never want to be the guy in the far left, the top one, meaning because there's usually something going on there that's just not traditionally, accepted in institutional management. That's usually something that, they decide to make a market timing call. They're 100% equity, and it just worked out.
So those are outliers.
Yeah, I would say that would be the case.
So there seems to be a real stop point right at, on the x-axis.
Yep.
Boom.
Yeah.
Why
So,
is that?
so it's the average versus the average. So that's where you would have a cluster of portfolios in that area. And I would say a lot of institutional investment programs have the same asset allocation strategy as you, so you would expect them to be in that area. Yeah, it's just a tool to identify how you're doing against the averages out there. Next slide. Was there any other questions online? Yeah, we could skip these. This is just if you wanted to see what the largest holdings, where you're weighted versus the different sectors. And that we'll go into the defined contribution plan, which, yeah. So the next slide. This is the defined contribution plan. There's 3 of them, as you all know. As of August 31st, those are the market values in the third column. Those are the participants in the plan, but it's not individual participants. There's people that are in the 457B plan that are also in the 401A plan. So these are just the number of participants per plan of 396. And as Todd mentioned, this has been like an 18-month process. We're moving the plan to Mass Mutual, which is noted below. The prior broker of record, there won't be one going forward, was Retirement Plan Advisors. And King Spry Herman, that's Keely. She spoke earlier. She's it's Hall Benefits, but the one on record was King Spry. So if we go to the next page. The transfer has been a result of a multi-year, objective of the subcommittee to, increase governance and fiduciary standards associated with the defined contribution plan. Between Todd, Karen, Danita, Zoe, they've been working on this now for 18 months. The RFP was a big undertaking. We sent it out. I think we got, just going by memory, like probably 20 responses. What was interesting, though, is your current provider chose not to go to submit a response, which it just came out last week. I kind of understand why now. They've just sold themselves to Empower. Mass Mutual's retirement group is going over there, so maybe they just lost focus there. But in this room, we actually brought 3 or 4 providers in. We interviewed them. We spent a day with them, and you ended up selecting ICMA RC, which is not a household name, but they are a household name within government retirement plans. They do about 9,800 government plans. They only do 457B, 401A plans. And within their plans, they have roughly 1.5 million participants. They're based out of Washington, D.C. And something that I've never seen that they were able to do, which was, I think, attractive to the committee, is they, within their portal, so when a participant logs in, they are going to be able to see their defined contribution benefit and their DB plan benefit right under one login. And that's pretty interesting. So, previously they would have to wait for their defined benefit statement and their defined, and put it together, have them mix it up. So the participant can put their retirement age in there, their salary, and they can get a holistic view of what their retirement benefit. The step that we're on currently is refining the investment options. Right now, because the plans were started at different years, each plan had approximately 40 plus investment options. Were not all the same. The participants were not using all of them. The idea is to streamline it. We have it down to 12 to 16. We're going to include more passive or index options in there where people just want to get market return. They now have the ability at a very low cost. And C, The third part is, that was important to the committee, is they wanted to give the employee a turnkey solution. So, if they didn't want to sit at home, look at mutual fund prospectuses or pick it out, they just say, hey, I'm a conservative investor, I want to put it in the conservative bucket. I'm a moderate investor, I'll put it in the moderate. And so now within the plan, they will have that option. The transfer, which is in motion right now, should be completed in the fourth quarter. And the last step that we're going to do once we get the plan up and running, similar to the defined benefit plan, we're going to put an investment policy statement in place where the committee can monitor the funds to make sure they're performing, relative to their indices and their peer group, which is not currently in place. So it will help, solidify the fiduciary, oversight of the plan. The next one is the last relevant slide. And this was important to the committee. They wanted product in there that they felt the participants would recognize and appreciate. And if you can see on the left, those are the funds that are coming in. There's a lot of Vanguard product, T-Row. The buckets on the bottom, if you scroll up just a little bit, the Vanguard Life Strategy, those are the conservative moderate growth where people can put their money in there. And more importantly, you can see the expense ratios on the right of the funds. And because of the ICMA platform, these products are a lot cheaper than what we were able to get at Mass Mutual. Mass Mutual's an insurance company. They were paying the broker of record. And we took the expense ratio, which is up, the average was like 1.25%. Now, people are going to have an opportunity to invest at much lower, and that's a savings to them, which adds to their investment return. You might say, like Brown Advisory at 1% is a high, but the small cap guys, they usually put a cap on how much money they can manage because the small cap market is small and they start with names. So that is common for the actively managed investment product to have a higher fee, but you can see the index funds, there's nobody cheaper than Vanguard out there. So, yeah, that's the defined benefit plan, defined contribution plan, and is there any questions out there?
This is Larry Himberger. I have a question.
Yes.
Todd, how do we project to the employees or the retiree or the employees of the benefit of this program? Is there someone they can talk to, or is it all online, or how do we get the word out that this is available?
I mean, there'll be some communications that's going out relatively soon. I mean, the full transition date, I believe, is the 9th of November, when employees can actually go online and make changes in the new plan. But we're going to have some employee education for the folks here. There's some virtual stuff as well. That was a big thing for us when we switched over, was employee education, because one of the reasons that we really want to do this is looking out for our employees is most of our folks, and John can attest to this when we did the mathing, were in the fixed fund. And it was paying a semi-decent return with Mass Mutual, but over the long term, they're really cheating themselves, and we wanted them to kind of understand, some of the education. Plus, there's options in there to have it managed. I mean, overall, from an education standpoint, this is light years ahead of Mass Mutual. I don't know how else to say it.
Yeah.
The amount of education that they can get here versus what they were getting before is night and day.
Yeah, we kind of skimmed over it on that one slide, but the participant education was actually the #1 item when we went through the RFP process. And as a result, under per contract, ICMA will be on site at least twice a year doing on-site meetings. Then they can handle individual meetings after. When we were with Mass Mutual and RPA, there was no requirement. They may or may not show up at that time, and Danita and the HR people were sitting there, answering participant questions like, hey, where should I invest my money? And they were feeling uncomfortable. So that's why it was the #1 thing we looked at was participant education and client service when we went through the search process. And ICMA, they're already coming to this area on a regular basis. They have a couple of the other government plans in the area. So we would have the same, he's a certified financial planner, we'd have the same person that, you know, as they come up to service other plans, they would be available for LNAA.
Did that answer your question, Larry?
Yes, thank you very much.
Thanks, Larry. Do we have any other questions? Are you?
Good.
We're good. Do we have any other questions about anything that's been presented? Very good. Thank you very much.
Yep.
Appreciate it.
Thank you as always, John.
Yep, thanks, guys.
Good to see you with the mask.
Does anybody want these?
Thank you, Lee.
Okay.
All right.
See you guys. Thank you.
All right. Todd, do you have any other items?
No, I think we got it all. I mean, other than Peter, you look good there. He's up in the, and there he is. He's smiling at us all there, so we want all to know that Peter's there. We
Thank you.
Great. All right. Yeah, thank you to everybody. Thank you for the
Thank you,
presentation.
Keely.
Appreciate it very much.
Thank you, Dave, and everybody else that participated. Thank you very much.
Very good.
Great to see you.
Okay, thank you.
Thanks.
Thank you.
Thank you very much. Do we have any other items or new business that needs to come before the Finance Committee this morning?
Glenn, I've got a question. I've got a couple of questions that I'd like to have a discussion with the group outside of the investment professionals present. Is that something that's acceptable for exec session?
Sure.
Sure. Well,
Okay, so if I could request an executive session, please.
Excuse me, it's Bob Friedberg. I have to know the topics that you want to get into before I can say that it's appropriate for an executive session.
Okay, what I'll do, Judge, is then we'll skip exec session today. I'll send an email to you with the questions that I want to talk about, and we'll see if it qualifies.
That'll be good, thank you.
all right, John. All right, John. Thank you.
Yep.
Very good. All right. Are there any other items then? Seeing none, I would ask for a motion to adjourn.
So moved.
So moved. Very good. Second, that we are out.
Right.
All right.
Thank you.
Thank you very much, everybody, for your time.
Thanks again, Dave.
Thanks, everyone. Have a good day.
Thank you. Making sure everybody else is good. I think we're good.
Okay,
So,
we're alive.
okay, we're good. So we're live and we're streaming, Mike.
Good morning, everybody.
Good morning, Mike.
Good morning, Michael.
Looks like you had a good last meeting, part of the last meeting I listened to, looked like you had a good session. In any case, Yvette, you want to do the roll call?
Yes, thank you. So Mike Dowd,
Here?
Brian Dames, Chuck Dicont, Jeff Matskin, Mike Stershik,
Here.
Matt Turk,
Here.
Chris Worley, Tara Zrinsky.
Here.
Okay,
Do you have your form?
no, I'll reach out to Chris Worley.
Okay. Yeah, we have 4 of 8. We need over 50%.
Mike is here.
Do we have a quorum?
Al, me.
We do not, sir. I do have a yes from Jeff Matskin, but I do not see him on the line. And I also have a yes from Brian Dames, but he's not on the line.
So maybe we can move from there. Is there public comment for committee?
No public comment.
Okay. Is it
We'll just move on to the updates and then come back to the action items later and see if we get a quorum.
We're thinking on the same page, Mike.
All right. So let's begin with an air service update, and I think that's Darren's responsibility.
It is, thank you, sir.
Darren, I just missed seeing your socks. It's have to get back into the meeting room again.
I'll make sure when you're back, I'll get a new pair for you, Mike.
All right, I appreciate
Find
it.
special ones for that. So doing our quarterly air service update, the last quarter, we actually had our consultant come in to do it. We're gonna just handle this one today. Sure, we've seen the headlines from the airlines, but, not much good news on the air service side from the airlines at this point. Layoffs, coming or pending potentially in the next couple of weeks, really. You see the big loss there from Allegiant. The only good news on this side is Delta saying they should be able to avoid voluntary furloughs. But
Can I ask just a quick question? Why is Delta, if everybody else is talking about 25, 30,000 layoffs, what's different about Delta?
I don't honestly know why Delta's not laying off, to be honest, or why they're able to not furlough, but I know they did have a pretty strong voluntary program, and I'm assuming that is what's taken up a lot of it.
I thought I'd seen something about the voluntary with them.
Early retirements.
Yeah.
Thanks.
They're getting 2,000 pilots to take furloughs.
Yeah, they announced that back in August.
So just some of the airlines that have either ceased operations or restructured, kind of concentrating on the United States ones there. Interesting thing, 4 out of those 5 have at least at one point in time been carriers here at ABE, and 3 of them as regional carriers for, the various legacy carriers, and then Miami Air has done charters forever here, and actually did some service for Allegiant for probably about a year, I think, off and on. They were doing some sub-service for Allegiant, so definitely is taking this toll. And this is why they're losing money quick. You can see the cash burn. Second quarter got down to where $7.5 billion a month they were burning. And they're kind of flattened out now at around the $5 billion mark. But again, it's brutal for them right now trying to make it through this and weather this. One of the reasons load factors way down. You can see 58% in the week ending September 14th as opposed to 81% a year ago. So they're not filling the aircraft. And then the other problem is even when they are filling it, they're filling it with less expensive fares. So you can see here in the second quarter, they would have actually needed 124% load factor to even break even because the ticket sales are so inexpensive right now. So they need 124, they're doing 58. Even I can do that math, it's definitely not good. And this is the big reason you can see there, even though we've seen some recovery in air service, air travel, look at that. The corporate travel has pretty much flatlined at this point. And I'm sure any of you who travel for business can probably say it. I typically would have probably had 4 or 5 trips between March and now, and I have not, That's pretty much what you're hearing from anybody. Little good news here, I guess, you're seeing the TSA throughput, obviously way down from where it was nationally. Interesting thing, I think, is as you look up there, can I make it work? There we go. Typical decline in September, we're starting to see more of a, all right, I don't know what I'm doing with this thing. Starting to see more of a leveling off here, so I guess that is good news, those lines coming together a little bit, but still obviously way down from where we want to see it. You've seen this slide in some form in the past, just sort of the recovery time in previous disruptions. This is definitely looking more like the Great Recession as we're looking at what the recovery is going to look like. I think every time I see a forecast, it goes a little farther out from what they're saying they're thinking we're going to recover.
Do you have a similar slide for our own experience here?
Stand by.
At AV? Nice. Good thinking.
This one really just talks more about the Great Recession recovery, and I think that's the nice thing to see there is we recovered about half the time that the national recovery happened. Then you can certainly see, when talking recovery, you're basically looking, scheduled seats and traffic on there, those lines coming closer together is really what we're looking for. That dip there is when you start to see the airlines really cutting capacity discipline, and as we start to get those load factors up, you see them increasing capacity for us here, and that's what we're going to be looking for here as we go as well. And then the TSA throughput, this looks almost identical to the one I just showed you on the national level. I guess, again, a little good news, we have sort of leveled off. I think honestly, if we went back to 2018, 2017, our curve would look a lot like that 2019. We typically see the big drop in September. So like I said, the good news is we're not seeing us drop off as quickly in September, but we're still way below where we want to be.
And that represents all passenger traffic, because that's not.
Basically, that's people going through the checkpoint.
So it does include flight crew members, but generally, it's passengers.
Our passenger traffic curve would follow this line fairly closely. Cut the top of the slide off here a little bit, but you can see there in sort of the early days of the pandemic where that was just cancellations. So at that point, the airlines were just reacting to what was going on.
Mm-hmm.
Tons of cancellations. Sometime May timeframe, they started to figure it out and really reduce schedules. At least the one good thing is now they're flying their scheduled flights. When you're canceling all the time, that really is really tough to sell tickets, really tough to instill any kind of confidence. So schedules are way down, but at least they're flying them now. They are actually what we see on the schedules for the most part what's happening.
We've seen numbers from, you guys report passenger traffic drops here. Do we know what the schedule declines look like?
Yeah, bye.
Just know I'm asking good questions.
Foreshadow. Can you guys coordinate?
No,
Okay.
Not setting them up.
All right.
I'll give you the $50 and we're done then. So schedules, how about that? There we go. So you can see there, sort of the lighter blue line on the top there was our 2019 scheduled flights. And then you can see the darker blue is so far 2020, what we have scheduled. Again, I think a little bit of good news, you can sort of see there in June where those lines got kind of close together. The red line on the bottom is actual passengers. So as a percentage of our scheduled seats. So in June, more people were kind of coming out and flying, and then what's kind of happened is all the travel restrictions and the case counts going up in most of the states we fly to. So you can see August we filled about 45% of our scheduled seats. In 2019 as a whole, we did about 86%. So that's what we really have to do now is you're starting to see the good news October, getting more schedule. So that's a good thing. But so we got to get this red line to start to follow that if we're going to continue to see a capacity increase. That's really where we're at.
But our inference is that we're seeing usage decrease because we do fly to the problematic states. We don't know for certain that people have concerns about going to those problematic states, right?
No, I mean, I think, and there's a slide here in a few that we can talk with Allegiant in particular. We've had the conversation, even as a base, our load factors are a little lower than a lot of their bases because, again, assuming because most of our trips are to Florida, and if you're coming back from Florida, you're supposed to quarantine or recommended quarantine. So I think, probably tough for a lot of folks to say, I'm going to take a week's vacation and then take 2 more weeks when I come back. So. And there's the quarantine list. And really good news is we have so much traffic to Florida, a little bit to Georgia, a little bit to Illinois, a little bit to Tennessee, all on that list. We have Michigan that's not on the list, and North Carolina that's no longer on the list. So we may have really going to 2 states that are not on this quarantine list at this point. So certainly not helping, whether it's, So just a little comparison to some of our neighboring airports and then some other comparable airports as far as scheduled flights, weekly scheduled flights. You can see, we're down about 42%. This is October flight schedule, 2019 versus 2020. We're down about 42% on the schedule from what we would have been last year. Definitely see where Harrisburg's kind of taken a little bit harder than we have. Wilkes-Barre Scranton has gotten hit very hard. I mean, they're taking it pretty hard. South Bend and Flint I put in here just because of location. They're both located fairly close proximity to hubs like we are. So good comparisons. And again, see, they're a little bit better than us. So that, why that is exactly, could it be the travel restrictions, things like that? It very, very possibly could,
This is maybe a naive question, but Harrisburg had what looks like a huge number of flights compared to us.
Yep.
Then cut a ton. What is driving? I mean, why do they have so many weekly flights before?
State capital. I mean, that really is what drives it. And planners will tell you that.
Yeah.
It's just because of the state capital. So just a little bit on our schedules. I know this is a super busy slide here. So can you move the little box by chance just up the top? Thank you. Just the good thing with this one, I think, is on the Allegiant side, is they are back to flying the exact same amount of flights per week in October this year as they were last year. So that's a good thing. Scheduled anyhow, as long as we don't see cancellations. So a couple of variations in where those are coming from, with some of the additions and subtractions that we've had. But for the most part, the schedule's pretty close to what it was. And they're the ones who've told us, that the travel policies seem to be affecting performance. That's what they're seeing. And again, I think that's probably pretty accurate. But they have not taken any destinations off the schedule. They're serving everything, at least on the seasonal basis that they normally would. So, good news from them, I think. American, a little different. They're flying less than half. Big part of that is the Philadelphia service that we no longer have. And again, I don't expect that to come back even when things do recover. I think that is probably gone. We always knew that was a threat to be gone, and I think this was probably the kind of straw that broke the camel's back on that one. We are seeing some Charlotte service coming back though, almost all of it now. So only 2 flights a week less than we were last year, so that's good. Chicago just under about 50% what they were last year. So they are doing some interesting things on a national level, really kind of pulling back from some of the bigger markets. Trying some point-to-point routes, mostly to warm weather destinations. Interesting for us to try and capitalize on that, but honestly, really the only one that would probably work for us is Miami, and with our service to South Florida already, I don't think that's something we're going to see.
Is American are they pulling back generally in Philadelphia? Like if they're choosing between investments in Philly versus investments in Charlotte, where are they sinking their dollars?
And when you're hearing from them, most of their investment right now is going to DFW and Charlotte across their entire route.
Gotcha. So for us, losing the Philly doesn't cut off a ton of.
No, I think ultimately they'll make up some of that with more Charlotte service as we recover. I think that's where we'll see it, and maybe potentially more Chicago service. Yeah, I think that's. I mean, never one to lose a destination, but if we had to pick one to lose, that's the one I would.
I mean, the net total one-stop destinations for us. Like, I think one helpful metric for us is to look at what we have our 9. Well, I guess it's 8 or whatever. What's our total number of destinations now?
So we were at 15.
And we'll be at 14 minus Philly. So what do we have in terms of a one-stop at 15 non-stops versus a total number of destinations and a one-stop at 14
Right.
non-stops.
Yeah, and right now, obviously, it's way down, but I mean, as we recover, it'll be interesting to see that if we still have the same amount of trips, basically.
I mean, that's the thing, if they invest more heavily in Charlotte, how does this impact our,
Right, and the one thing I can say about all the airlines, you know, sort of talking any kind of long-term to them right now, it's about 6 weeks, you know, which is unbelievable.
that's a
Airline
long time,
schedules-
Todd.
Schedules used to be, you know, you could look out 6 months at least, and probably 12 months, especially with the legacy carriers, and know that schedule is pretty solid. I would not be confident telling you what our November schedule is gonna look like yet. I mean, I just wouldn't. We'll see it this Saturday, we'll get the new schedule dump, and I'll probably have a pretty good idea what November's gonna look like, but next Saturday is when I'll probably say, okay, now I'm confident this is what's really gonna be there, because that's what they're doing. They're still very much reactionary on everything they're doing, so.
Do you think that November will pick up because of people traveling for the holidays and stuff like that?
It should. I mean, typically we would see a little bit of increase, but I don't know what to think right now, to be totally honest. I really wish I could tell you, but with this,
My family converges in Cincinnati every year and nobody's in.
Yeah.
Nobody's flying to Cincinnati for that.
and you're gonna definitely see a lot of that, I'm sure. It's not.
We've seen the same thing with our family. I think people are gonna be sheltering at home. They're not gonna be planning long trips.
Yeah, so,
Yeah, that's what I'm thinking, so.
yeah, it'll be interesting. I mean, again, you know, we can certainly talk about it more. Even Tuesday, I might be able to tell you a little bit more what we think November is gonna look like, because like I said, airlines load schedules pretty much every Saturday, and this Saturday, I think, will be a pretty good indication of what November will look like. But, which is, like I said, unheard of. And any other time, if you asked me, if I couldn't tell you what November was right now, I'd probably tell you to fire me. I mean, that's,
So if you don't
but,
have flights scheduled far in advance or anything, is that a deterrent for people to even?
well, I think if you look at it, actually, there's probably more on the schedule right now than what we're gonna have in November.
Oh, okay.
That's really what's happening. They're not, if you look at December's schedule, it probably looks like what it would have looked like without the pandemic for sure, and November's is probably pretty close. So that's really what they're doing, is they're cutting them back as they go, so these things are scheduled. So,
Do they consolidate flights then too? Like,
for certain, yeah, for sure, if they're seeing loads, and that's what they're looking at, all this is, you know, what's demand look like at these markets, and do we need 3 flights to Charlotte, or can we do it on 2?
Yeah, okay.
Delta has been sort of the most normal, kind of staying the course a lot with their scheduling. I mean, for us, we're down. Up a little bit with Detroit, which is interesting. You know, they were at 3 flights almost every day last year, but now we're at 3 flights 7 days a week. We're just getting our Atlanta service back on October 1st, 5 days a week right now. So hopefully we'll see that continue to grow, because I think that's a really super important destination for us. They're really doing a lot on the business side, which other airlines are not. You know, kind of looking at, we're going to be ready when this thing is over and people do start to travel. So I think they have a lot more confidence in business travel returning. You know, they're spending a lot of resource on converting corporate accounts and doing some of that. So it should be interesting to see how that strategy plays out.
Do we know what our number 1 second destination after Detroit is? Like, where do people connect from Detroit?
I don't know. I mean, I can get that. I don't know it off the top of my head. We can definitely run those reports, the connected review reports. I would venture to guess at the West Coast somewhere, but I'd have to look to see.
That's what made me wonder, I almost wonder if a direct to Phoenix would even be capable, you know? 'Cause that's such that southwest area of the country, a lot of people still go to.
Yeah, I think Denver is probably something we would get before Phoenix.
Okay.
Just because of the carriers. I think that's, you know, a United Denver flight, and I'm not saying we're gonna get that anytime soon, you know? So, but yeah, I think that's probably something, and that's something we were talking about again in February, you know, as to how do we start to
Remember all those things we were talking about in February?
Yeah. You know, so again, I think as, in the next couple of years, as things start to come back, yeah, I think that comes back on the plate maybe. But again, I think these airlines are gonna look very different coming out of this, so it's gonna take some time to figure out what is back on the plate, you know, for these carriers.
Well, I think as you mentioned, I think the rest, you know, if we can get an Atlanta flight every day, I think that's gonna be.
Yeah, and that's what it really comes down to now, it's chipping away. You know, you guys met Brad last month, and as he put it to me, one of the airline planners told him, airline planning in the next several months is gonna be the Hunger Games. He's like, that's really what it comes down to. So it's like, you know, get what you can get out of it at this point, because they're reducing everywhere. So figure out what you guys can take advantage of. And United, obviously very small for us. They are adding back Chicago in October. I think that's really good news, because honestly, we weren't expecting that till probably next spring. We thought that was probably off the table. So They're also doing some point-to-point stuff, but those Florida markets that are doing point-to-point too, we have service to every one of them. So that doesn't really help us. We need, again, if we get it, they are doing the Newark bus service twice a day. Still seems to be popular, so. And I think that's it. We're happy to try and answer any questions anybody has.
All right, Darren, thank you. Thank you.
So I have one question. I was talking to somebody in Allentown earlier this week about the possibility of service to San Juan with Allegiant. Is that, I know that was something that we kicked around when they established the crew base here. It would have been impossible without a crew base here. There is, like, Allentown is up to like 55% Latino, and like 80% of those people are from Puerto Rico.
Yep.
And you see similar numbers in Bethlehem and Easton. There's a huge market here. Is there, and this person was telling me, like, look, anything that we can do to put a case together to assist the airport in attracting that route. I don't know, obviously, you know, it's a crazy time to be asking about additional routes for somebody that lost 93%, or $93 million or whatever, but it's one that has always been kind of a, that seems like an opportunity.
Oh yeah, for sure.
Is that, like, how can the local community assist you with the case?
Yeah, I think, so San Juan is something we definitely continue to talk to. I mean, not in the last several months, but we've always kept that on the radar with Allegiant. They haven't had good experience with San Juan from the destination they've tried it from. It has not been very successful.
What's the, why?
I don't know why, you know, and that's the thing. I think it's not, I don't think they picked the right destinations, you know, the right origination points. I mean, they were doing Pittsburgh at one point, and I don't think that made any sense. This is live though, so I should be careful.
Well, it's looking at it as a leisure destination versus as a family destination, right? Like, there are people, the people who would fly the San Juan route out of ABE would not necessarily be going for vacation, they'd be going to see their families, which is like a completely different market, right?
And that's, we have sort of tried to sell them on the demographics here, I mean, because it's easy. I mean, it's such an easy case, like what you just said. You
And
know,
it
it's
was
actually
very
gotten better.
successful many years ago when we had it.
Yeah.
So, not with Legion, but a different carrier was running to San Juan, and it was extremely successful.
And they just had other problems in their network.
Well, that carrier doesn't exist anymore,
But I think it's something we definitely can rekindle, and as far as what can the community do, yeah, I think that's a huge piece for us on this route is, and exactly how we engage them, I'm not sure, but I mean, some testimonials, things like that would help. Obviously, the demographics are huge, that's an easy one, and we pull that in, that points to it. To me, it seems like it's a no-brainer when you look at those.
Yeah.
Engage the Hispanic Chamber as part of the Greater Lehigh Valley Chamber and see if they can be advocates for it?
Yeah, for sure, and I think we've actually had those conversations with them in the past as we've been putting some of the stuff together. We've talked to them, we've talked to the radio station.
So I just joined the Hispanic Chamber's Marketing and Communications Committee to potentially talk about those types of things. The owner of La Mega, I talked to him the other day, so they are like the #1 morning broadcast, not just in Allentown, but in Philadelphia as well right now. They acquired a signal in Philadelphia, they have a signal in Reading.
Yeah,
His thought, and this is from previous, I think they were here.
They advertised in the terminal for a while. I think they actually may still they have downstairs now. I think about it.
But they have huge reach.
Yep.
And they're, it's the guy who owns the station. The guy who does the morning show owns the station. He talks about what he needs to fill 4 hours every morning. You could get him going for 30 minutes on how to, how important it would, or how great it would be to have, a nonstop destination out of ABE to San Juan, and he'd fire up his audience.
And we had, like I said, we had used them. In fact, we had a video from him in, I don't know if it may have been last year's presentations when we met with Allegiant to talk. It was either last year or the year before. Like he had done a video for us, and we did have a couple of testimonials from some folks in the community that we put in there. But yeah, I think that's the thing. If we can show, I mean, Allegiant is definitely community-minded, that they want to serve this community. So I think if we can show that there's the demand. And then again, then the next piece is, they were talking about exiting San Juan altogether, so that it may be even more difficult. Doesn't mean they won't try it again, but I mean, the other way the community can always help is money. I mean, if someone's really willing to put up any kind of guarantee on some of these seats, that makes it a lot easier to sell to.
Yeah.
But that's if there's interest, we certainly can talk to some folks about how we put it together. It's a certainly more complicated process, but yeah, if there's a way to put together some sort of travel bank or.
I'd encourage you to reach out to, it's Victor Martinez.
Yep.
Yeah, I'd encourage you to reach out to him and say, let's talk about this.
Yeah, we
He's
definitely will.
interested.
We certainly will. For sure, I appreciate
I
it.
don't know, I think if you look at or talk to the travel agency community, they would probably tell you that San Juan itself has not recovered from the storms.
That's the other problem.
So they're still not sending many people down there from a leisure aspect.
For a
certainly
leisure vacation.
family. But I think some of the families migrated up to the States because there's so much devastation down there.
I know.
And that's a great point, Larry, because I can tell you, we were very close, even without having the base here, of getting a shot at San Juan with Legion. I think they were ready to do it when the hurricane, the big hurricane hit 2-3 years ago. That definitely stopped it for us then.
Yeah.
But again, I think it's trying to make them understand that this isn't, you're still gonna have to have leisure traffic to support it, even with that family population. You're gonna have to support it with leisure, because you're not gonna fill an airplane even twice a week.
I mean, those families travel, like, every Puerto Rican that I know in Lehigh Valley, and people that I don't know, they've got a 2 or 3 times a year trip to back home in them. And if it's available, they're paying, whatever rate they're paying in Newark or in Philly.
Yep.
If they can fly on a discount carrier, like, forget about it.
Yeah. No, well, I'll definitely reach out to him, and we'll definitely keep that on the radar. I mean, it's certainly gonna be a bit of time before we're gonna see it, but it's definitely worth starting to put some stuff in motion now.
Yeah.
All right, any other questions for Darren?
All right,
So
thank
that's what I
you.
see, Brian Thames logged on.
Yes, we now have Brian and we also have Jeff Matskin. So we have a quorum.
All right, then, why don't we go back to the top of the agenda and, ask for, the minutes of the August 20th meeting were distributed electronically. I was not here, but I read those minutes. Are there any additions or corrections to them? Then if not, could I have a motion to approve the minutes as distributed?
So
moved.
I'll
All right, do I
second.
have a second?
Second.
Very good, thank you.
So,
All those in favor, please say yes.
Yes. Yes.
Very good.
I've never had anybody tell me that.
And I think Steve is up for discussing the bid for the fire protection system.
Yes, Mike, thank you. Good morning, everybody.
Morning.
This is RFP to approve our bid for fire protection systems, our inspections and testing. We do this on an annual basis. Basically, there's a 4-year contract or engagement to inspect all 16 facilities here at ABE. We do that annually per NFPA, life safety guidelines, and then the folks doing the inspections are required to have this NICET certification. So it means the folks doing the inspections have to know where they're sticking wires. Darren has a great story about it, inspections at one of his airports, and they lit off the foam system in the hangar because they weren't qualified to do the job. So part of the bid requirement is the folks doing the work here.
Rhode Island,
Yeah, Rhode Island.
when I was up there.
What did it cost to refill that system?
Oh, it wasn't even the refill the system, it was the damage that we did to aircraft and everything else with the phone.
Oh, there were aircraft in the hangar at the time?
It was,
Typically, when it happens, there's planes in the hangar.
it was a 7-figure incident when it was all said.
So
Yeah.
this is engaging a company with the appropriate technician certification. This is a budgeted item. We do this every year. So this contract, the lowest bid is for a total term contract of $104,728 or $26,000, $26,182 per year for the inspection. To give you kind of a scale of this project, there's about 1,100 systems and detectors here on the campus. So about 1,050 of every one of these fire strobes, detectors, heat detectors in every building. And then about 60, 65 sprinkler systems, foam systems, clean agent systems. So it takes the folks it's about a 3-week project from start to finish to perform these inspections.
And this foam that you use, is this the same foam that has like
Some of the buildings, yes, some of the buildings have the clean foam, so it depends on what building or what.
And so what is your practice or the practice of this company to make sure that that foam doesn't, is contained properly so that no one's exposed to that?
Right, that's a great question. So part of the testing, they're not discharging any foam.
Okay,
So the foam remains in the system. They're testing the pumps, the sensors, all the stuff all the equipment that actuates the actual system. And then a few of our buildings, Hangar 11 in particular, have foam retainment systems. So if this, if the system does discharge in the hangar, we're capturing the foam instead of sending it out into the
okay, that's
storm.
good. And so you said that there's clean foam and then there's the other foam. Is there a sort of a plan to transition everything over to the clean foam so that you rid yourself of this issue?
Yes. So part of the problem is making sure that the new foam is compatible with the old system.
Okay.
Our fire trucks are a great example. This is getting a little bit off topic, but all of our fire trucks have the PFAS foam. FAA has basically told us you're not permitted to shoot the foam unless it's an absolute emergency.
Right.
They are currently investigating a new clean foam, but ensuring that it works to the appropriate mixture ratios every time in the trucks is kind of that's where we are in this phase. We did purchase several years ago a piece of equipment to test the trucks without discharging foam. So
that's good to know. Thank you.
And we also bringing Hangar 11 online with new foams. Obviously, as we're bringing new systems online,
right.
I think we were actually one of the first in the country actually to deploy a building, a hangar with the new foam. So we were trying to again move in that direction, but there is certainly, as Steve points out, a process and making sure that systems are all compatible to do that, and certainly a cost.
What accounts for the significant increase in
That's
the previous contract?
that's a good question. The low bid was 104. What's interesting is the high bid at 174, 175 and change was from the previous contractor. So they went from 88 to 175.
Can I just say that that's not atypical of what I've seen over the many years here, is that a contractor comes in and once they understand really the scope and breadth of what is required to go through these, this isn't putting up a ladder in this building to go check that detector. Now they need a lift in every hangar. They've got to go through all of this process. And we do a pretty extensive walkthrough. I give Steve credit on site. People can take a facility tour and take a look at this prior to bidding. But my experience generally with these types of service contracts is that, and I think you'll even see it here, and Steve, I don't want to misspeak, but it appears to me that you're looking at 26,182 for 4 years. There's no escalation
No
over
escalator
4
for this,
years.
for this bid.
So my guess is, number one, the previous contractor didn't have escalation in 4 years. And that by the time the next round comes around,
This will be the new high bidder. Well, which
and I
begs the
hate to say
question.
that.
Well,
It begs the question, do they know what they're getting into?
Well, that's an interesting, so prior to the bid, when we put the RFP on the street, we received several right-to-know requests to see what the previous bid was and what the current invoicing was. So we actually provided our current costs to the prospective bidders. So I think.
And but even at the contract that we did in 2015 was based on pretty significant pre-bid meeting, but also facility tours, bringing contractors out to walk them around the facility, show them the areas, so they really can see hands-on where they're going to need to access and what's it going to take.
We've increased our square footage.
We have.
Since
We've added more systems.
Hangar 11 did added about $5,000, just Hangar 11 alone.
Okay. I have concerns about about seeing that increase and knowing that the previous bidder is now the high bidder, or the previous low bid is now the high bid. And was Keystone, are they really, you don't want them to be the high bidder next time around because of their experience. Like we want somebody, we know that they're the lowest qualified bidder, but are they that really know what they're getting into.
And these are based on.
We don't want what Darren's talking, the $7 million.
We had non-qualified, let's just go with that.
Yeah. So the other thing here is this was not just an RFP, this was an RFPQ.
Right.
So there's an element of making sure people are qualified and showing similar experience, that they've worked at similar facilities, they have technicians that have the appropriate, because there's a range of NICET certifications that allow the technicians, system designers all throughout in different grades of criteria. So we really did spend quite a bit of time developing a spec that we think, because to be very transparent, I think in the past, prior to 2015, when we were doing some of these inspections, I don't think we had, to Darren's example, necessarily always the right personnel in this, performing inspections. So we want to be very clear that who's coming on the facility to do the inspections has the certifications that are required based on the equipment that we have. They have the right training. And we want to be very transparent about the facilities. We are very specific about what our facilities are, how they're going to have to be accessed, when they can be accessed, and those types of things as well. So I think, again, it's not unique to this contract is what I would say, but I've seen this over and over and over the many years here in time, is that once someone's here for quite some time and they understand the facility and the requirements, there's an element that people do understand that there is a dollar value that's going to get you closer to getting the contract. And so that's always part of what we have to contend with when we're dealing with price as part of this equation.
So Keystone Fire Protection Company was the lowest qualified bidder. They are a local company. They're based down in Quakertown, Malvern area.
North Wales.
North Wales. Somewhere down north of Philly, but they do have offices here. Part of this contract is the maintenance piece. They're required for emergency services. If we need emergency service to be here within 2 hours, and then they'll, any other services provided at the hourly rates shown up on that in the analysis. Once again, no increases over the 4-year period. Some of the other contractors had a significant increase just in their hourly rate over a 4-year time frame. Oh, yeah, I did write North Wales on there, sorry. Should have read my own writing.
Yeah, it's always good to do.
So I suggest we select Keystone Fire Company as our fire inspections service for the next 4 years.
Steve, thank you. So why don't we get a motion on the floor and then we can have any further discussion? Will someone move that we move forward with the fire suppression system inspections with Keystone?
So moved.
Do we have a second to that?
I'll second that.
No, it's more for discussion. Do we have any more questions for Steve before we move forward?
This is Brian. I'll just make one quick comment. I can back up Darren's story. I know of a hangar where the janitor accidentally set it off, and that was also a 7-figure deal for insurance. Wheels, brakes, and other airplane parts that had to be mandatory replacement after that. So it's not a small deal.
Thanks, Brian. Anything else from anybody? So if there are no further questions, we'll call the question, and all those in favor of approving the bid, please say yes.
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 Any opposed? Okay, thank you.
No problem, thank you.
You're welcome. Now we move back to capital projects. So Ryan, are you on?
Yep, thanks, Mike. All right, good morning, everybody. So the project summary is in Novus, as we've been doing the last few months, but we're going to just kind of touch on the highlights and obviously answer any questions that anyone might have. You can see one of the projects, the design grant for the runway, has officially been closed by the FAA. Hopefully next month we'll get a few of the other 99% completes off the list. The big, I guess, change just to note, I think we had mentioned at one of the last meetings, the line number 4, package 2 for the runway. We mentioned we were pretty far along but hadn't received a lot of the bills. And you can see we've actually paid out just about half of that now, 13.3 million. So obviously working with Todd and finance, part of the cash flow, getting that in there. And as well as the FAA giving us timely reimbursements back for those costs as well, which has been very beneficial. Again, Hangar 11, just really wrapping up the paperwork and some of the final cleanup items. Had the state actually out here, the state rep that provides us the funding last Friday, kind of gave a walkthrough, which went very well. Security checkpoint connector. We did have a pre-bid meeting yesterday. The documents are out on the street. You may have seen some pushes from Colin and his group out on social media. We did it virtually. We were here, but there's about over 50 participants that were at the meeting and over 30 different companies between the 4 different prime contracts, which is really good to see that interest. I guess the other thing going through what we did adjust, as you see in the details, line number 7, that main terminal parking lot rehab was previously a design item that we were tracking. Now that we're in the construction, the short-term lot closed, we're going to get that started next week. Revise that to match the state grant we have, the approvals we got from the board, I think back in July or August, with Barker and Barker and the parking revenue access control equipment. So that's shown in there as well. And then kind of moving through, again, nothing major on the other ones. We're working through finalizing, I think we mentioned last month with the GA update, we're finalizing the quote for the Braden Terminal building. So more to come on that, hopefully get that order here in the winter so we can start working on that in spring, which is what we were shooting for. And then with the approval of the grants that we had earlier this month, those will be added to the list when some of these other ones come off with the 2020 grants. Those 100% federally funded projects will be included. And then some more discussions probably next month regarding number 13. We talked a bit before, the Hangar 7 fire suppression system. We're looking at trying to, Tara, to your point earlier, is there's obviously the containment of the foam should there be a release. And part of that project, the strategy was potentially doing some of that work with one of those on-call contractors we've done in the past, for paving and some of the civil work. So we'll talk more about specifically how we might address that as part of the existing contract and contractor that's there now, which is actually way ahead of schedule, and they might be finished with the upgrades the next month or two versus, I think, early spring or early next year was when we were originally going to be completed with that. So more to come with some of those, but I think that's really the highlights. I just wanted to touch on all the details in Novus, but I'd be happy to answer any questions.
Anybody have questions for Ryan? And Ryan, thank you.
Sure, thank you.
Tom, is there any new business for us to deal with today?
No new business to report on today, Mike.
All right, then I'll entertain a motion to adjourn.
So moved.
Very good. Thank you all very much.
Thank you. I think we're all gonna, if it's okay with everybody, since we just got started, we'll just roll right into exec. Kind of try to wrap it up. Sure. Thanks. We've got a pretty straightforward agenda.
Just so you know, I just saw one there, Peter Kirsch is on.
Oh, great.
Music exec session. That's perfect.
All right, welcome everyone. Let's start right at 11 on the dot. I'd ask for Sylvette, do you want to do a roll call?
Sure. All right, Matt Turk,
I'm here.
Glenn Geisinger,
Present.
John Hayes. He's on the line. Ted,
Sorry, I had you on mute. I'm here.
thank you. Ted Rosenberger.
Here in Fort Lauderdale.
Hey.
Nice. And Tara Zrinsky. Here. We have a quorum.
Excellent. Do we have any public comment today?
We do not.
Excellent. Well, maybe. Just a couple action items here. I'd ask first, you should have your meeting minutes in Novus. I hope you all had an opportunity to review those. Are there any questions related to the minutes? I would then ask for move a motion to approve the minutes as presented.
So moved.
Thank you, Glenn. Can I get a second?
Second.
Thank you, John. All in favor of approving the minutes as presented, please say aye.
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 Okay, minutes are approved. Thank you. You should also in your packet be able to see the Florio Perucci invoices from August 2020. I'd take a motion to approve those invoices as presented.
So move.
Thank you. Second?
Second.
Thank you, Ted. Any questions related to the minutes as presented? Or ask for a vote to approve the minutes as presented, or the invoices as presented?
I'll make a motion.
Thank you, Tara. Wait, I think we did a motion.
Oh.
I need the vote.
We got a vote.
All in favor, please say aye.
Aye.
Thank you.
Aye.
Very good. Just speedily getting to Darren's development update, which
This won't take long. I think the majority of this we'll do in exec session, but we have just a couple things to run through here.
perfect.
Go ahead to the next one, Silhouette. Just moving forward on our rates and charges, I want to just keep this on everybody's radar. We do have a revised resolution from our Aviation Council that we're reviewing in-house, meeting with our Airline Affairs Committee in the beginning of October. And again, should be back to you by the end of the year for approval on the new methodology. So go ahead, Silhouette.
Go back to rates and charges for a second, if you don't mind. So we do this effective every January, correct?
Well, we typically re-approve the rates themselves. We're doing a whole new methodology, a whole new resolution, which we have not done in quite some time. So this is a total revamp from top to bottom.
Is this the time to do it in this year?
It's probably more important than ever.
Those are some very emphatic head nods on that statement.
Yeah, let the record show that Tom's eyes almost popped out of his head. But yeah, so.
When you think about rates and charges, think about the drivers. What are the things that actually we use to kind of cover the cost?
Yeah.
Is it operations, is it passengers, is it bags? That's what we're talking about.
Perfect. Thank you.
Sure, I can flip it. I'm trying to move quick, man. Slow me down here. Very happy to say that we are tentatively scheduled to close our final Rockefeller closing on December 11th. Tentative, just based on our deed of release, should be posted to the Federal Register by FAA in the next week. And needs to be, it's a 30-day posting, and then FAA will need a little time to finalize those documents, but we're hoping for, Rockefeller's ready to close, we're certainly ready to close. So just a reminder, this money is restricted. This will be for AIP projects. I'm sure we can find somewhere to spend it, but it won't be, it doesn't just go into our operating budget as much as we probably love that today. But and these estimates, I did the math, not Todd, so they're estimates at this point in time. I'm not taking any ownership of them at this point until we look at the commission schedule. Is kind of a nightmare, so I just, like I said, I'm pretty confident, but we'll know exactly what the numbers are as we get to closing. So go ahead. Hangar Air Products is moving right along. They are kind of in their final design. I know they have it on the street for a design build project at this point in time. We've been doing a lot of work with them. Ryan's been working with them on stormwater and some surveying, things like that. We have a second potential hangar developer that kind of popped up in the middle of this. That came to us to talk to us about building. Wanted to know if Air Products would have any interest in sort of partnering on this and building them together. So we put that out there, Products. I don't know what the response will be. We'll see. We haven't heard back from them. We have a call with Air Products next week, and we'll see if they have any interest. I mean, it'd certainly be nice to see them do two at the same time as opposed to one, but I don't know. Air Products may be too far along the process now to do that too. So
Have you reported to us who the current developer is on that? Who's the current developer? Is Air Products acting as their own developer?
yeah, they have, like I said, they have it on the street for a design build firm, but yeah, they are doing the development in-house. They have it in-house. I don't know who actually will be doing the project when it comes, but so more to come on that as we see. Either way, it sounds like the second is a positive. It sounds like it's a good possibility that we could have another hangar in that area, whether they do them at the same time or not. So, but we'll see. Go ahead, Sylvette. Brayton, Tom, and I had the opportunity to attend the Forks Township Supervisors meeting on September 3rd. Honestly, it was almost an introductory meeting again because there are 3 new supervisors and a new manager. So we did get to show them the draft ALP that you guys have all seen in the past. And we did show them and go really walk through the suggested markups we have of that agreement that's been in place since around 2000. I thought it was a very good meeting. They were very receptive to everything. They did say basically this is a lot, give us a month or so to digest and then get back with us. So they'll have another meeting early October. After that meeting, we'll reach back out to the manager to see kind of what next steps are. But I think positive so far.
So this was a public meeting, right? Because it was their supervisors meeting.
Yep.
So somebody reached out to me and they asked why the GA was not informed that you were going to meet with them. And that's part of the transparency that you had pledged to the GA and that community about what's going on at the airport, because they felt like this really impacted them. Is there any way that you could reach out to GA and?
Colin, do you want to take that?
Yeah, I'll take that. Yes, I had that discussion with the LVGAA and Deacon Everett following the meeting. And essentially what we're doing is we have arranged, and it's going out, I haven't alerted Megan to it, we're gonna have a break discussion virtually next Thursday at 11:30 in the morning to go over specifically the Braden Airport discussion of Forest Township and other issues going on. So we arranged it outside of that so there would be more interaction and question with the GA community.
So has that been advertised?
It's going out today. We finalized the time. Yes, we're going out today, but I alerted Megan to it actually a couple days ago that we would be doing it at that specific time so she could share with the LPA.
Okay, that's great.
Yep.
Just as long as you continue that open line of communication.
Without question. I mean, I think the newsletter went out previously, and then I had spoken to Megan about several things after the last board meeting about the two-way communication. We have new websites, we have things that you saw in the newsletter, and that was shared with the LVGAA. Beyond that, we felt, and I felt necessary, along with the directors here, talking to Tom and Darren and Ryan, to specifically talk about some of these things, because what happens in a public meeting, and obviously you know this,
Yes.
being in this, is there has to be some contextual discussion where people can interact and ask questions because they may not fully understand really the scope of what we're talking about. So to have the director set aside some time to come down and do it on YouTube and do it virtually so it could be shared with GA members, whether Braden or LVGA members, we felt was the best way to do it. So that was the process, and I alerted to her that, I think I talked about a week and a half ago that we were going to do that, and then we were going to schedule it. We have scheduled it for next Thursday.
So you schedule it, and that information is going out. Will that go out to the board too?
That will go out to the board, that can go out to the LVGAA, that can go out to our Braden tenants. We're gonna do it across the board, so everybody can do it.
Okay, great.
Yeah, no problem.
And there were several members of the GA community at the meeting. Well, I'm sure there were a couple in person and definitely a couple virtual attendees, so, including me. So, go ahead, next one, please. Hangar 11, we've signed our second tenant, so we're working that. They should be moving in, I think, as in a week or so. They're supposed to be moving in, but they're paying now. The lease is signed, and so we're up to what, about $180,000, $170,000 annual revenue right now coming out of that. So pretty happy where we're at, and the interest has been pretty phenomenal, really. Where we've quoting pretty much every single day. We're quoting.
Were those local tenants that just moved into a nice new facility, or are they new to the area?
The Cessna, the smaller Cessna there, was a company that had based here about 8 months ago, waiting for this hangar, so they were here. The other one was a tenant that came from Morristown, New Jersey, so they're brand new to us. So both basically are new because of the hangar. Like I said, the one had been here for a bit, they were waiting for it to open. So.
That's awesome.
Yeah, so. Yeah, it's
I like conquest business.
It's definitely, the word of mouth is getting around now with people starting to sign. I think with the second one out of Morristown signing, that'll really help push it now too, so.
How many more of that size can we accommodate?
So let's see, that one is 6,000, so we're only using 8,000 of a 54,000 square foot house right now, so.
So we can keep going.
Yeah. We do have one inquiry right now, basically, that would take about 30,000 of it if that one comes. And actually, he just called me again, so that one seems fairly warm, so we'll see. But that would be a really good one, obviously.
Aaron, the rents that we are getting for the space, how does that line up with our projections that we put together at the beginning of the project?
Actually, a little higher than what we had originally projected. I believe we did the pro formas at 14, and we're getting 16 for hangar. So.
This is Ted. I have a question.
Sure.
Can you hear me okay?
Yes, sir.
Who's charging you 30?
Okay. My question is, as tempting as it is to just fill the rest of the space with one easy tenant, the fact that this is growing quickly, which I predicted would happen, and I'm thrilled to hear that it's real. Would the airport authority not be in a safer, more secure, better place to have a larger number of tenants all contributing to this hangar rather than just suddenly going back to nothing available at ABE by renting the rest of the space? I know it might take longer to fill it all, but then it's more customers and more security if something would go haywire with one tenant. We don't have all our eggs in one basket.
Yeah, you're kind of breaking up, but I think I got the gist of it. You're basically saying we'd be better off to try and have several smaller tenants as opposed to one large tenant that would take the rest of the space. I mean, I guess there's certainly an argument to be made for that, but I also don't think that, I don't know that we legally could say no to someone that comes in and says they want 30,000 feet, and B, I don't think I want to be the one to make the call to say, yeah, we don't want you, we're going to wait for more small ones. So definitely understand what you're saying, Ted, and I can see what the question, but like I said, I really feel like I don't think we would have the opportunity to say no to someone that is a, credit-worthy tenant wanting a large amount of space.
I think, Ted, to your point, it's how you position this space in the market. Right now, it's just kind of, it's a, take whatever we can get positioning, or has been to take whatever you can get positioning. If we do land that large tenant, we obviously work to create some kind of backup, some kind of support for when that tenant eventually vacates, right? And it's just a matter of how you position the space in the market. But you're right, and it's just a strategic choice on, do you go big, a single big one, or do you kind of go one and twos?
Right. Well, I'm glad we had the courage to do this, and it would be interesting to see once this is filled up, which I know will happen. What the final economic model is, how the total cost of this, with the rent coming in, how the pro forma, the ultimate actual pro forma looks on this. And hopefully that will be justification to keep going.
Yeah, agreed.
And apply all the lessons we learned from this one to the next one, maybe build it cheaper, but have an equal success. So congratulations on real movement on it.
Thanks, Ted.
Thank you, Ted. I think that might be it. So back to another one. Yep, that was it, unless there's any questions. And then there's certainly some more discussion for exec session.
Any questions for Darren? There's a few items that we may be discussing in executive session. I'll ask the judge for that.
Thank you.
Thank you, Darren. Tom, do we have any new business?
We did have a public comment that came in late.
Late breaking comment.
Yep, so we wanted to circle back to that one. So
Beth, would you please read that?
I sure will. This is from Megan Everett. She says, this is Megan Everett, president of the LVGAA. On September 3rd, 9 days after the LNAA board, chairman, and staff publicly committed to forging a two-way channel of communication with the GA community. Executive Director Tom Stout and Director of Business Development Darren Betters formally appeared before the Forks Township Board of Supervisors meeting to propose rezoning Braden Air Park. They were on the agenda, but no notice was given to the GA community beforehand. And when the Forks Township manager forwarded my request for the presentation slides and the paper handout that Darren provided to the supervisors, to both Tom and Darren Betters, I received no reply, nor did Colin Rigbon, Director of Public Relations, provide them when I followed up. Rezoning and future non-aeronautical development plans for Braden Air Park are matters of vital interest to the GA community, and yet no information is being shared, even that presented in a public forum. I'm asking the LNA to honor its stated commitment to transparency and sharing information with the GA community, starting with the purpose and proposal from the Forks Township Board of Supervisors meeting.
Thank you, Megan. And I think, Colin, you addressed some of that a moment ago, but I do think if it's possible to share the material that you shared with the Board of Supervisors, it's absolutely worthwhile to share it out to Megan.
Yeah, without question, I think the important piece of that is making sure that the information is shared in the proper way. And I think by doing the virtual meeting, we'll have the opportunity to share the information and give it some context to it. So we definitely do that. Yep.
Thank you. Okay. Without any other new business, we do have a real estate matter to discuss, for which I'd ask for an executive session. Judge, thank you.
Matt, the topic that's going to be discussed does relate to a real property transaction, a potential transaction, and it is covered by the executive session provision. And in addition, there'll be a conference with counsel so that there's a lawyer-client privilege that would attach to this as well. And therefore, the topic is appropriate for an executive session.
Thank you, Judge. I'd take a motion to enter into executive session.
So moved.
Thank you, Glenn. Can I have a second? Wait for John to come off mute.
Second.
Thank you, Ted. We don't need a vote to go into executive, right? All right, we are, as soon as